All right. Good evening, trader. Thank you so much for tuning in to the weekend wrap. My name is Corey. It is May 23rd, 2021. Let's take a look at what's going on in the markets. So, in the news this week, the Asian session opened up primarily with caution as investors warily awaited the U.S. inflation figures set to report this week. As COVID infection rates continue to fall and more Americans are returning to work, there will be inevitably be talk of tapering bond purchases and raising interest rates. When interest rates rise, asset prices such as housing are likely to fall, as well as equities, as low interest rates can lead to abnormally strong PE, PEG, and price-to-book ratios, etc. So basically, what I'm trying to say with this is inflation will deplete the price of assets, whether you're talking about stocks or housing or whatever. So stocks will likely react accordingly as a large corporation. As interest rates rise, it's harder for you to borrow money, or it's more expensive for you to borrow money. Therefore, it stagnates growth just a little bit, and equities can take a hit. So I think that as inflation continues to tick up, the Fed will ultimately be feeling greater pressure to raise rates, and it depends on how the market takes it. But usually this kind of stuff you get a temporary flush in either direction, a temporary hit or boost, and then trade will resume to be primarily structural. So yeah, and another note on that. So rising interest rates means investors can yield better returns on U.S. Treasuries, and thus may reallocate some of their assets to bonds. So if you look at what's been going on in the tech and growth sectors, things were really, really strong in March and April. And then late April and May, things have definitely started to flatten out. We'll talk a little bit more about that later. But you can see the commodities market is at its highest level in like 15 years, I think. Gold is at its highest level since January. Last I checked, it was trading at 1881. You can see the GC contract gold futures down here on the bottom left. That's a daily chart. So what I'm saying is, like, people are moving out of tech and growth and moving into more like consumer cyclicals and commodities, financials, that kind of stuff. So the market's basically just in a holding pattern. Bitcoin continued to tumble, however, having found marginal support above the 30,000 level, albeit it's shown little to no long-term institutional involvement, or I should say reinvestment thus far. So the literal halving of the market cap has had some investors questioning its legitimacy as a store of value, given it only took China cracking down on miners and a tweet from an eccentric billionaire to literally cut it in half. So despite that, BTC has remained largely imbalanced and has yet to show signs of continued decline, or substantial signs of a continued decline, I should say. It's just really imbalanced right now. On the more bullish note, oil prices are rising as a storm in the Gulf of Mexico threatens oil production. So there has been talk of Iran and the U.S., or excuse me, I should say the U.S. lifting economic sanctions on Iran, which has led to a recent increase in their oil production, which is why oil fell last week. Oil fell. Yes, oil fell. However, there is a 3-month nuclear monitoring deal that expired. Just I think it was, I can't remember exactly when it happened. It was very, very recently. This has raised some doubts about continued U.S. and Iranian cooperation. So oil is up with that in the storm. So as far as the S&P and the NASDAQ futures go, they're primarily flat. The NASDAQ down is 0.2%. All right, here's what's going on the calendar this week. So tomorrow, Monday, we have no major events. Tuesday, we've got CB Consumer Confidence. That is for the month of May. And then we also have new home sales for the month of April. You can see there's a drop off in new home sales. from April compared to March, or at least what's forecasted thus far. You can also see a drop in consumer confidence, which is not surprising. I mean, the market's been really bullish, or spending has been very high because of stimulus. Wednesday, we've got crude oil inventories. Looks like last week we had a surplus of 1.332 million barrels. Thursday, we've got initial jobless, lowest I have seen it in the past 6 months. Last week it was 444,000. This week is 425,000 forecast. We also have core durable goods orders. I believe those are orders for long lasting, durable durable goods. And the core, I believe that negates the aviation sector. So it's long lasting durable goods save for aviation. So basically, this is a leading indicator. It's an indicator of the manufacturing industry, and it can be a leading indicator of economic growth. So you can see that demand is falling off. We know demand is falling off because for March it was 2%, and then for the month of April it's forecast to be 0.7%. So like I said, manufacturing sector is slowing down. GDP, we've got the quarter over quarter for Q1. And then we also have pending home sales. All right, earnings for this week. So tomorrow, Monday, we have Varian. Tuesday, we've got Intuit, Agilent. I'm not sure how to say that. AutoZone and Nordstrom. Wednesday, we have Nvidia. That is probably the one to be paying attention to this coming week. Thursday, we also have Salesforce, Costco, Autodesk, Dollar General, HP, Best Buy, Dollar Tree, Ulta. And then Friday, nothing major. An abnormal number of IPOs coming this week as well. We have got Flywire Corp. They're a payment processing company for international students, as well as Paymentus Holdings. That's another payment processing and invoicing company. Figs Inc. They are a healthcare apparel company. We also have ZipRecruiter, who I thought was IPOing last Thursday, but I'm not sure what's up with that. And then we have two acquisitions companies. So these guys are a venture capital company, specifically in the tech industry. Both are offshoots of Wind Capital Management. So, all right, here is the sector analysis. So this is last week. So you can see, Microsoft, Apple, Amazon, Tesla, Home Depot. Everything is just neutral, bearish, basically. The market is just it's not been taking a massive hit. It's just really kind of chopping sideways right now. So healthcare was seemed to be up a little bit, although it was mixed. Industrials down, railroads down. But the indexes as a whole are definitely mixed. So. And then here's the last month. So this is kind of what I was talking about with the pullback in tech. I mean, Tesla having lost, almost 20%, almost a fifth of its market, its valuation or whatever. That just seems crazy to me. So I know Michael Burry has that massive short Tesla position on, and it's really weird to see an automotive company trade like a tech company. That just it's strange to me. In any event, but you can see that in the last month, banks have just been absolutely crushing it. So JP Morgan, what else we got? Berkshire, Wells Fargo, BlackRock. Financials have really, really, really been crushing it. So. Investment banking and hedge funds, man, they just been cleaning up. So, okay, so here's what's going on in the S&P futures so far tonight. So you can see that we opened up with a strong gap down right out of the gate. We had a false breakout below Friday's low, started to grind back up into balance. And I would imagine all this was they were just taking these stops. They drove it down, they took the stops, and then they rode it back up into balance. So it's funny, because you look at this and you think, well, like, well, the longs won, right? Well, this might have been the longs too, you know. So yeah, I mean, if you're long, like you might have a ton of orders down here, and you might drive the market down hard on the open and then eat up all these orders so you can put on a nice big fat position and then drive it right back up. So you can see that we got stopped right at this low volume node from Friday's range. Um, so right here, this we made a little over 100% retracement, so that does indicate some bearishness. And then we had an immediate 110, 112% retracement immediately afterwards. So you got strength in both directions. This is just a tightly coiling spring here. My bias, I said I was cautiously bullish. However, I really think trade is going to be rotational for the next day or two. All right, so here's the 1 hour. You were just looking at the 5 minute, just so you know. So in the intermediate term, trade seems more weighted to the upside, and Friday's false breakouts suggest prices above. I should say, so yeah, prices up here were deemed unfair for the buyer. Thus, we'll need to wait for more confirmation as per whether or not the downside strength will continue. The false breakout may be indicative of a possible destination trade. However, as most false breakouts of this caliber tend to invoke a strong counter auction to the other extreme. So basically, what I was trying to say by that was when you get a false breakout above a major level like that, typically it's going to trap out a lot of people and then reverse, and then you're going to get a retest of the other extreme. So that's why I'm primarily neutral right now, just because I don't know if the shorts are going to sell again on the open and we're going to come back down and retest this trend line, or if the longs are going to come in with strength and despite all this, drive it back up again. So we'll just have to wait and see. And then here is where we are in the daily chart. So you can see just how choppy it's been for the past month, and we've got a pretty strong line in the sand right here to the upside. This is a previous false breakout. And then so you can see the selling strength coming down, and then it was immediately bought back up. So like I said, you got strength in both directions, and now it's just like a very tightly coiled spring. And you've got the long time frame that I presume is primarily just going to be waiting on the sidelines, and we'll just need to wait for more information before the heavy investors start coming back in. So this is the low volume node that I really wanted people to be paying attention to. So it's from 39.83 to 41.14. So essentially, if we break back into this low volume node, you always run the risk of it driving all the way through this thing and retesting the point of control down here. But the same goes for the other side. Like if we break up above this red line, we have a potential to kick back to the upside. So, there's just a lot of things going on economically right now if you trade on a fundamental basis. So that's why I'd imagine, the bigger money is still kind of waiting for more info. All right, so given sentiments are mixed, trade should be catered primarily to rotational strategies until larger players on the sidelines are brought to a head. Key levels to watch on the S&P are around 4180 and 4114 for a breakout in either direction. Potential dip buys in Bitcoin may come to fruition this week should larger players reappear. I will want to keep an eye on 42,000 as that is my line in the sand. Major economic numbers will report on Tuesday and Thursday, so don't forget to mark your calendars. But that's all I got for you guys. Thank you again so much for tuning in. Sorry I didn't have any setups for you guys for this week. I just got really busy working on my website, which I'm redoing right now. I did post a new article on how to identify the participants in the market. If it's short term, long term, big player, or big money, small money, etc., etc. So check out the website. There's some new changes there, and I hope to be getting some neat trade journals apparel posted up there very near in the very near future as well. So thanks as always, guys. Take care.